What's good, traders? What's good, people? So this is another episode on the trades we missed last week. So without further ado, let's move on to the trade we had on Monday. Now we had a bearish trade on Monday coming from a fair value gap here, a fair value gap from Friday, a Friday's fair value gap, and we can see that this is a supply area right here. From these spots, we would anticipate that price would come to that area and give us a bearish trade. So after price taps into this fair value gap here, this supply zone, you can see a break of market structure. You can see price no longer want to go to the upside, but rather created a break of the previous low right here, and also a fair value gap. Now you can see this is a fair value gap here. So this fair value gap is what we'll use as our entry. So this is a bearish trade right here, and we'll put our entry just like so. For that short position, we'll put it like this, from the start of this fair value gap to the end of this high right here, to the high. So we'll put our stop loss like this and our entry at this fair value gap. So as market breaks this previous low, it comes back to tap into that fair value gap and bounces off from it. So we'll put it like this, and our take profit would be at a previous low, just like so, like this. So this is going to be where our take profits would have been on Monday. So this is a risk to reward of 3.18 for Monday's trade. Now that was our trade number one. Now trade number two is also a bearish trade. We have a fair value gap right here that market is tapping from. So as market taps away from that fair value gap, what we need to look for is a break of market structure. Now we have a break of market structure here. This is a previous low. Market breaks that previous low and as well created a fair value gap right here, and this fair value gap is going to be filled by the market and give us a bearish trade. Now this fair value gap is where our entry is going to be. So like so, this is how we put it here. You can use the center of that fair value gap as price would want to fill it that way, and stop loss right above this high that touched that previous fair value gap right here. So next is our take profit. Now we have our take profit at this previous low here, giving us a risk to reward of 1.2 risk to reward ratio. Now the next take profits might be a risk to reward of 3 points. Now I'm trying to look for where our previous low might be, but I can't seem to find any previous low right now. So we can use a 1 to 1.2 or a 1 to 3 risk to reward ratio for this trade. And we have our take profits at this spot right here for our bearish trade, and that is our trade number 2 on that same Monday. Now the next trade is also a bearish trade. Market taps into this fair value gap right here, as you can see, and the next thing is a break of structure. Now we have this previous low right here. Market breaks below it and also created for us a fair value gap right here. Let me take this box out to show us our fair value gap. So this is our fair value gap right here, and at this start of this fair value gap is going to be our entry. Now you can see this as inducement. Price taps into the fair value gap but comes back again to have a deeper entry into that fair value gap, and this is the stop loss right here at the high that created that fair value gap, and our take profits can be this previous low right here, and this is a 1.43 risk to reward ratio, or you can use this previous low at this spot here for our third bearish trade for Monday. So this is a risk to reward of 3.74 risk to reward ratio. The next thing is to find our trade number 4. Now our trade number 4 happens to be on Tuesday. Now this trade number 4 is coming from a fair value gap here from Monday. Let's check it out. Now you can see this fair value gap right here. This is our Monday's trade, our last bearish trade on Monday. And the next thing is that price had to tap into that fair value gap and also create a break of market structure as always, and also a fair value gap here. Now using this fair value gap, you can see a much bigger risk for your trade here, and it might not lead to a bigger risk to reward ratio, but a smaller profit. And you can also use the order block instead for your entry. So as price goes up to tap into that order block, you are already prepared for a short position. Here. So your entry is going to be like this, and your stop loss right above this previous high right here. The next thing is your take profits. Your take profits can either be this previous low here, or you can use this previous low right here, and this is going to give you a risk to reward of 2.2 RR. Now the next trade we have is our trade number 5, and our trade number 5 is also a bearish trade. So this week we had more bearish trade than bullish trades. So you can see this fair value gap right here. Markets reacted from that fair value gap we had a fair value gap on Tuesday, and markets reacted from that fair value gap on Wednesday. So we can see a bearish trade right here. We have a break of market structure here, and before that we have our fair value gap here. So at this fair value gap is where we will take our entry. This is how we'll take our short position here at the start of this fair value gap, and at the top of our high is where we put our stop loss, and at this high is where we are going to put our stop loss. So we have our take profit here, giving us a risk reward of 2.38 RR. So that was our bearish trade for Wednesday, and that was our 5th trade for the week. The next trade is our trade number 6, and our trade number 6 is right here. You can see it is also a bearish trade. We have a supply area here which has a fair value gap, and at this fair value gap is where markets respected and reacted from it. And you can see this is a break of market structure, and we have a fair value gap right here. So at this fair value gap is where the markets can come to respect. So as market taps into this fair value gap, it reacts from it, giving you a bearish trade. You see how we have a break of market structure and a fair value gap right here. This is our fair value gap here, and we take it to the high at that spot, and you can see how market respected it. Let's give it our short position right here. So we have our stop loss right above that high, and our entry at this fair value gap, our take profit would be at this previous low right here. And you can see take profit right there. So the next trade is our trade number 7, Our trade number 7 is also a bearish trade, a fair value gap right here. This is our fair value gap, and price comes to tap that fair value gap and creates for us a break of market structure here. So we have a break of this low right there, and we also have a fair value gap at this spot. See our fair value gap here. This is our fair value gap here. We can use this order block right here. So as market fills this fair value gap, it also taps into this order block here. The next thing is our take profit. So let's put our short position right here, and our stop loss at this high that created our fair value gap. And our next thing is our immediate low for our take profit. So our take profit would be at this previous low. This previous low right here would be our take profit, giving us a risk to reward of 2.58, or we can as well use this low at this spot here. This is a low here. So after this, we have another bearish trade, and this bearish trade is our trade number 8. So our trade number 8 goes like this on our same 3-minute time frame, as you can see here. Let me use this. So we have a fair value gap here. Let me take this out for you to see the fair value gap. So we have a fair value gap here at this spot here. Let's see it clearly here. So price taps into that fair value gap here. You can see this wick taps into this fair value gap to fill it up and goes down here to create another fair value gap. So we have a fair value gap here and also a fair value gap here. So this would be our entry right here. So our entry will start from this spot because we already have our break of market structure. So this is how it's going to be. We have a break of market structure here. And our take profits would be at this previous low right here. As you can see, that's at our take profit, and this is how it is. You see how price taps into that fair value gap and ends its cycle here. So this is where it ends at our take profit, giving us a risk reward of 2.84 for our trade number 8. Now the next trade we have is our trade number 9, and this is our first bullish trade. Now this trade is coming from this fair value gap here. You can see this fair value gap here. Price taps into this fair value gap right here at this spot, then created for us another fair value gap. Let me take this out for you to see it clearly. Now we have a fair value gap being tapped into and another fair value gap being created. So we have here our break of market structure. Now we have a break of this structure here. As price breaks this previous high, closed above it, and also comes back to fill up this fair value gap. So as price comes back to fill up this fair value gap, we'll take our entry, and this is our first bullish trade for the week. So we have our entry like this, and our stop loss right below this low that created our fair value gap. Our take profit would be at this spot before this fair value gap here, because this might actually take the market back down. So as you can see, price already went back down because it tapped into this fair value gap. So you can as well use a 1.62 risk to reward ratio, or you can use this previous high right here, giving us a risk to reward of 4.14. As you can see, price takes as you can see, price rallied up to our take profit right here on our trade number 9. So that was our first bullish trade. So the next trade we have is our second bullish trade, which is our trade number 10. Now this trade number 10, you can see price coming from a fair value gap here on Friday morning. Fair value gap, tapped into it and created for us another fair value gap right here. So as you can see, this fair value gap is being tapped into multiple times by these candles, but price fails to go below it because this is a very strong setup right here. So this is how it is. Price taps into it multiple times. So at this first tap is where we'll take our entry. So this is our long position, just like this, and our stop loss will be right below this low that created for us our second fair value gap, and our take profits would be at a previous high or a fair value gap. Now we have a fair value gap here. As you can see, we have a fair value gap here. Price might fail to reach the high, so we have a fair value gap here, and that's where we'll put our TP, like so, giving us a risk reward of 6.1 ratio. So this is it, our bullish trade, giving us a 6.1 ratio. And you can see we have another trade. This is our trade number 11. So this is our trade number 11. After price taps into this fair value gap, you can see one trade right here as price crossed below this previous low and created a fair value gap. Price respected it and goes to the downside. So but that is not our trade number 11. This is our trade number 11 here. This is an obvious fair value gap that price respected here. This is a fair value gap here. You can see it's being drawn. This whole candle like this created a fair value gap. Let me take this one out. As this fair value gap is being tapped into, now we have a break of market structure right here. We have a break of market structure, and you can see our market created for us another fair value gap here. Let me take this one out for you to see again. This is a fair value gap here. So markets comes back to tap into that fair value gap and give us a bearish trade. So this is a short position right here, and we have our stop loss right above this high that tap into that first fair value gap, and our entry is right at that fair value gap that was created next. Our take profit can be at this low here because we have a fair value gap right here. So you can use this take profit here for our trade. You can see we have a 3.22 risk to reward ratio right here. That was our trade number 11 right there, and that was on Friday. So guys, that was the last trade for the week. So let's go back to our charts and let's analyze and see what's next week hold for us. See you guys on the next episode on the trades we missed last week. Peace.